Good afternoon and welcome. I am Maria Rosa Vaquerizo. I'm the CEO of the Andean American Associations. The Andean American Associations were the first chambers of commerce for Ecuador, Peru, Venezuela, and Colombia. They were founded in the 1920s and 1930s, and our associations together have hosted over 1,000 programs over the years. For today's Latin American Outlook 2022, we are honored to have as speakers Luis Oganes of JP Morgan, Alberto Bernal of XP Securities, Fernando Diaz of Citi New York, and our moderator is Augusto Rilova of Sherman and Sterling. A warm welcome and thank you everyone for being here with us today. I would also like to welcome some special attendees. We have Stephanie Younger-Mote, President of the Colombian American Association, Juana Caicedo Selinger, President of the Ecuadorian American Association, and Ambassador Michael Skoll, President of the Venezuelan American Association of the US. Also with us today in attendance are Nelson Baldeón, a sponsor of the Ecuadorian American Association, Jose Gonzalez, our former speaker, representatives of Hogan Lovells. We have the rating agencies, Fitch Ratings and SP Global. We have with us also Asobanca of Ecuador. We have Citi, Goldman Sachs, ING, Interori Bank, JP Morgan, Rabobank, Santander, Scotiabank, UBS, and Wells Fargo, among others. We also like to welcome the academia from American University, Columbia, and Georgetown. Now I would like to introduce our moderator of today. It's Augusto Rilova. He works at Sherman and Sterling. He regularly advises on developments and financings, as well as acquisitions financings of energy, renewables, mining, and infrastructure. All of these are projects in Latin America. He advised most recently on the award-winning Condor and Huemul solar and wind portfolios developed by Mainstream Renewable Power in Chile. He has been named as one of the next generation lawyers for Latin America. He received his LLM from Columbia Law School and graduated summa cum laude with Pontificia Universidad Católica del Perú. After the presentations, all the attendees have a chance to ask questions. Please use the chat button at the bottom of the page. You have a chat button there, and you can send any questions, and then Augusto will ask the speakers at the end. He will facilitate. And now, okay, the floor is yours, Augusto.
Thank you very much, Maria Rosa. I'm honored to be here with this great panel today to discuss the Latin American outlook for next year. So our first speaker is Luis Oganes. Luis Oganes, he's a managing director and head of currency, commodities, and emerging market at JP Morgan. Luis has been working since 1997. Luis manages a team of researchers that analyze fundamental and technical drivers for global currencies and commodities, as well as the economies and strategies that analyze macro dynamics of emerging markets economies to identify investment opportunities in fixed income and currency markets in emerging Asia, Eastern Europe, Middle East, Africa, and Latin America. Luis obtained his PhD in economics from New York University in 1988 and his BA in economics from the University of Lima. Our second speaker today will be Alberto Bernal. Alberto is the Chief Emerging Markets and Global Strategist at XP Securities. Previously, he was the head of Latin America Economic Research at Idea Global, Inc., where he conducted in-depth research and economic analysis on the region. Alberto has been named the most accurate economist of Colombia in 2006 by Revista Dinero, one of the top 5 future economists of Colombia by the newspaper La República, one of the future top 40 executive under 40 by Latin America, Revista Poder, and one of the 100 Latin American leaders under 40 by the Revista Gerente. Our third speaker today will be Fernando Diaz. Fernando is Vice President, Latin American Research at Citibank New York. Where he's responsible for the coverage of Argentina, Ecuador, Chile, and Uruguay. Fernando has contributed to the team's regional research, and prior to joining Citi in 2000, from where he is since 2011, he worked as teaching assistant at Universidad Torcuato Di Tella. Fernando has a bachelor's and a master's degree in economics from UTDT. So without further preamble, Luis, what can you tell us about Latin America for next year?
Thanks, Augusto, and thanks, Maria Rosa, for the kind invitation to this event. Good afternoon, everyone. Let me just give you a snapshot of what we're thinking about Latin America as a whole, and maybe focus a little bit more on my comments on the Andean region, given the membership of the associations that are present in this webinar. Latin America before the pandemic was going already through a process of a slowdown and of a lot of frustration, I would say, by Latin Americans by having lost the dynamism that was evident during the previous decade, during the super cycle of commodities. And then when the pandemic hit, unfortunately, ended up being the region that was the most affected among the three EM regions, with a decline of GDP that reached somewhere between 6 and 7%. When you look at the growth performance of this year, 2021, obviously, there is a sizable rebound. The latest projection that we have for Latin America is 6.7% growth this year. It ends up being a little bit of the mirror image of the decline on the previous year. So given the low base of comparison, it's very difficult to get too excited about that very, on paper, high number. And certainly, if you ask around Latin Americans if they feel that growth, they will probably say no. This is not a growth rate that is creating jobs. And it's just almost like a statistical rebound compared to a very dramatic drop last year. Next year, 2022, is going to be a little bit more telling as to what the real, let's say, a normalized growth dynamics is. We do have a projection for next year of only 1.8% growth for the region. This is slightly below potential growth that we estimate for Latin America, which is 1.9 or 2%. I mean, potential growth is not observable, so this is just a broad estimation. So, which means that in a more normalized dynamic, unfortunately, Latin America is not going to be, it's basically going to be growing a little bit below potential, and which means that per capita GDP is probably not going to be growing, and this is what makes the situation complicated, just because we have a round of elections that is probably going to lead to a lot of unhappy people making choices not necessarily being potentially easy prey for populist offerings by various candidates, and that is something that we're all going to be watching during the course of 2022. The one thing to highlight about Latin America is that unfortunately the rebound that we're seeing this year and the growth forecast that we're expecting for next year is not going to bring growth GDP back to the pre-pandemic trend that we were expecting. In fact, when we look at what is the size of this quote-unquote scarring, meaning a permanent loss or at least a sustained loss of output compared to pre-pandemic levels, we estimate that by the end of 2022, Latin America is still going to be growing around 4.4% below the pre-pandemic growth trend, which is complicated because it means that despite the recovery, we're not yet surmounting, the big hole in which Latin America fell, and that is again what is going to be felt by inhabitants in the region. We can go over individual country projections, and I would say that maybe what is obviously of interest is the projections for the Andean countries. So let me make a very quick sweep across the region, going from north to south, starting with with Venezuela. Venezuela is actually a country that, strictly speaking, we don't have a growth forecast, and we haven't had it for a couple of years now. This is partly because, given the issues of participation in the Venezuelan debt market by U.S.-based investors, there's been certainly much less demand for this type of information from Venezuela. But perhaps most importantly, it's been the difficulty of tracking growth numbers just because of the lack of availability of reliable data. Oftentimes we just refer to whatever the IMF is saying, but when we speak to the IMF teams, they themselves don't admit that they don't have any privileged access to better quality information that the market participants do. And the numbers that they present are therefore, very broad estimates. The one thing, however, that I would share with you that is interesting is that, of course, we have seen in recent years, maybe since 2014, a dramatic collapse measured in of Venezuela's GDP measured in dollars, right? It used to be at the peak probably $400 billion economy. Maybe it was a time when the Bolivar was overvalued, but so be it. That was the number in dollars. Now the latest number that we have seen, again, taken with a huge grain of salt, is around $40 billion. So there's been an 80% decline. And to the extent that we have high oil prices, that the government has gotten rid of price controls in this past year, has allowed, has lifted import tariffs. We do hear reports of maybe some more of economic activity taking place, and after such a dramatic decline, the bar to grow, to display positive growth, is actually quite low. So it is possible, again, pure guesswork. We don't have numbers. I don't have even a magnitude to tell you, but it is possible that actually growth in Venezuela in 2021, or the outlook for next year, could be positive. And again, it is because of a dramatic decline. Growth is probably stabilizing, and given where oil prices are, that is allowing some resumption or some recovery in economic activity. So probably, though, given we start such a low base, such a dramatic decline in GDP, maybe few Venezuelans are going to be feeling this in terms of a positive dynamic. But at least, well, if we have to refer to absolute numbers of growth, it is possible that between this year and next year, we actually do see growth returning to positive number, but again, after a dramatic decline. Moving on to Colombia, the projection that we have for growth this year is actually quite on the high side, 10%. But again, coming from a dramatic decline in the previous year. But the number that we have for next year of 5.5% ends up being one of the highest numbers of growth projections that we have for Latin America in 2022. Partly it is again, obviously high oil prices are supportive of the Colombian story. Remains to be seen whether the elections and the election uncertainty dampens some of the dynamism. So a lot of caveats to that number, but at least what we have published, this is the highest growth projection that we have at individual Latin American countries for next year. Elections are obviously the biggest source of uncertainty, and I'm sure my colleague Alberto is going to elaborate on that. So more comments to come on this. Going on to Ecuador, President Lasso is having not an easy path in trying to pursue reform. Obviously, that is, from the market's point of view, the one government that did emerge that is actually trying to pursue a reform agenda and trying to move things in the right direction. There is a tax reform, a fiscal reform that was recently passed. It is being challenged in Congress. We do see, however, the possibility that given the veto power that President Lasso has, that in the end this reform may be sustained. And if so, we will likely see, as part of the IMF program, the next disbursement occurring, and which would be a positive for the credit story of Ecuador. If you look at the budget and the assumptions for 2022, you can see that the Ecuadorian government is projecting $1.2 billion of debt issuance in next year. It is possible, if things go well with IMF, and of course, if oil prices remain supportive, it is conceivable that Ecuador may actually be able to return to the market next year. So that will be an auspicious moment, given how complicated the situation situation and the cost of borrowing for Ecuador had been in the last few years. So actually next year, if things go in the right direction, there will be a bit of a turning of a page. Of course, we're not making big bets on the political dynamics. The situation is still extremely difficult for the administration. So the issue of protests, the issue of a lot of rejections of some of these reform initiatives will be there. The opposition, even though it's fragmented, is still strong compared to the representation that the President Lasso's party has in Congress. So it's not going to be an easy ride. But I would say that at least there are some good things to mention, and maybe next year we can see them coming back to market. And then back down to my own country, Peru. I would say that even though the election already happened several months ago, political uncertainty remains front and center for the market and for the participants in the real economy. This type of uncertainty where, we have had already changes, not only at the prime minister level, but also several cabinet positions. And now there's an initiative of potentially, forcing an impeachment, a vacancia of the president. Beyond what may, beyond whatever the outcome may be of all these steps, the reality is that Peru right now is in some kind of, standing still. It's in suspension mode, and is keeping, all the reports that we hear about willingness to spend and invest, both at the corporate level or even at the individual level, is being put on hold, just because no one knows exactly how much this political uncertainty is going to damage growth prospects and of the Peruvian economy. When you look at where commodity prices are, you would think that the Peruvian economy should be really extremely buoyant, growing much more than it is. And the reality is that it is not. Growth number this year, again, very high, 13.2%, but this is because Peru was the country that was the most affected last year. So this is almost like a statistical rebound. The growth projection that we have for next year is 2.6%. This is below what we still estimate potential growth to be in Peru of 3.5%. So next year, we don't see that, even though growth is going to be positive, a good year for growth. And again, the politics and the uncertainty that is derived from that is in the driver's seat, unfortunately, at this stage. Let me stop here. I'm sure more comments to come during the Q&A. Thank you.
Thank you very much, Luis. That was super interesting. Now is the turn of Alberto Bernal. Alberto.
Thank you, Augusto. Well, first of all, thank you to the Andean American Association. Thank you, Maria Rosa, for always inviting me. It's a pleasure to be here with you. Alexandra, thank you for organizing all the logistics, and a pleasure to be with Fernando, with Augusto, and with my good friend Luis. Real quick, before I go into the specifics of politics, because I think this is a very relevant issue. One of the main curses of our region, Latin America, is that we have been, for decades, been completely incapable of generating enough domestic savings, which makes us completely subject to whatever happens in the world economy, to whether or not to have or not have growth going forward. So it's important to keep in mind that whatever happens in 2022 in the developed world is going to have major implications for our region. And what I mean with this is whatever the Fed decides to do, whatever the Chinese government decides to do in terms of stimulus, et cetera, et cetera. One piece of good news, because I'm always a very optimist guy, I just want to let the audience with this piece of data. With the performance that we have seen in oil prices in the last 2-3 weeks, I think is a very high probability that the U.S. will see gasoline deflation in the neighborhood of 12% during December, which means that the inflation number in the US during December is probably going to be somewhere around 0 or 0.1%, which is going to be very positive from the standpoint of the transitory discussion on inflation fundamentals in the United States. And that's positive because that probably means that there's a little bit less pressure over the dollar to appreciate, and rates remain relatively low, which is what we need, again, because our region has no capacity to generate enough savings. Real quick on the specific countries, because I always think that the best section of these meetings is the Q&A session, so want to leave enough time for the Q&A. Real quick on Argentina. Argentina is going to have to sign an agreement with the IMF. That's as simple as that. Argentina owes $44 billion to the IMF. The IMF is very uncomfortable with the Argentina owing $44 billion to the IMF. There's 22 billion in more or less 22 billion amortizations in 2020, 2022. Argentina has probably liquid reserves of $2-3 billion at this point in time. So this is pretty simple. Argentina either signs an agreement with the IMF now, or it signs an agreement with the IMF on its knees after we have another major collapse in terms of the exchange rate dynamics. So let's hope for the best, that the government understands that this is not a, okay, we're gonna sign or not sign. No, you have to sign. It's as simple as that. There's no choice other than signing an agreement and allowing Argentina to have an easier path towards fiscal adjustment. And I do think that the IMF is going to be lenient. It's going to be something close to what the Greek agreement was 5, 10 years, 7 years ago. I don't remember quite. And hopefully, let's hope for the best that we get this agreement. In terms of Mexico, there are no elections in Mexico. By the way, I'm going to be focusing mostly on the politics in this panel. There are no elections in Mexico other than the referendum that AMLO wants to do on himself. It's an irrelevant issue, but it's going to happen anyway. And they're going to use, Morena's going to use it for popularity issues, and because there are gubernatorial elections. So that's an important component. So we will see some political noise in Mexico because of this issue. But the main issue going into 22 for Mexico, because this is a multi-year issue, is electricity reform / energy reform. This is a constitutional reform that the AMLO wants to pass in the legislative. AMLO doesn't have the votes unless the PRI participate in these reforms. And our political team at XP still believes that this is going to be a very difficult ordeal for López Obrador, and let's hope so. Because if this reform passes, this is going to be very detrimental for Mexico's potential growth dynamics in the future. And this is going to be a complete about face from what the prior government did, which was very positive, which is to open the energy sector to private investment. So this would be basically going about the renationalization of everything that has been done, with horrible repercussions on growth and judicial certainty, et cetera, et cetera. But we will have to be focused on that. Brazil, very important election in 2022. We're all hoping for the best, that we have a third candidate. But what my political team in Brazil tells me is that, this is wishful thinking. Brazil is a very polarized country, like everybody else, like every other place around the world at this point in time. So it's going to be most likely Bolsonaro against Lula da Silva. In terms of governability, what my political team in Brazil sees is the reality is that if Lula wins again, because of the expertise of the PT inside the legislative branch, et cetera, governability could actually be a little bit easier compared to what it is right now in terms of with the Bolsonaro administration. In terms of market friendliness, obviously we all will appreciate Guedes and his reforms, et cetera, but with the latest developments that we have seen in terms of the spending caps, et cetera, the market has lost a lot of faith on this administration. So in terms of which government will be better for the market in 2022 remains to be seen. But here's the bottom line for my team in Brazil. Whoever wins is going to find the same thing. There's no money. So you have to fix your fiscal, you have to fix your structural issues. So whoever wins, whatever happens, you need to continue working on the structural reform issue, and there's really nothing else that you can do other than advance on that. My home country, Colombia, and on the political front, and I will let the economics to Fernando and to Luis. So here's the bottom line, and this is how I see it. Obviously, the market doesn't want to see a Petro government come 2022. Why? Because Petro is talking a lot of nonsense. That's the reality. No more oil exploration, printing money, et cetera. I mean, I understand if you're a politician in Argentina and you don't have a market access, well, you have. At least you can say, yeah, we need to print a little bit more because we need to pay pensions. But Colombia has open access to local markets and external markets. Talking about printing money to spend more is just completely ridiculous and makes absolutely no sense. But here's the bottom line from the standpoint of how I see it in Colombia. Petro has been in campaign mode for 15 months, 15 months. And the highest poll I have seen is 32% for him. Nobody else has been campaigning. People started campaigning about a month ago, the other candidates, the centrist candidates or the right-wing candidates, but Petro has been going steady for 15 months and with the worst economy in 100 years. So if you're able to only get to 30% more or less with the worst economy in 100 years, with the worst pandemic in 100 years, with a weak government, and et cetera, it's pretty unlikely, in my view, that you're gonna be polling much better in March, April, May 2022, when as Luis says, I mean, we expect 9.7% growth on Colombia in 2021, and JP expects 10%, and it's gonna be around that. With 10% growth and unemployment having actually fallen pretty much to pre-pandemic levels by that point in time, it's pretty unlikely that he will have more votes than he does have right now. And there's one basic difference that I see between the Colombia experience and the Peruvian experience. And this is probably mostly a function of luck. The election in Peru took place in 2021, worst year to ever have an election. 2022 is probably going to be much different. Let's hope for the best that, you know, this Omicron thing doesn't get out of hand, et cetera, but let's hope for the best. And the second issue that is very important is that there are ample conversations of coalitions. So the most likely scenario is that come first round in Colombia, there will be 4 to 5 candidates at most, not 18 candidates. And this is going to allow for a much more orderly vote and somebody like Castillo making it to the second round, which was pretty much almost completely unexpected for most of us, is very unlikely to happen in the Colombian case. So the second round, and I strongly believe this in the case of Colombia, is going to be todos contra Petro. And it's going to be hard for him to win the election in 2022. This is not to say that there will not be a lot of volatility. There will be a lot of volatility, not least because Colombia has a huge current account deficit, and Colombians are very fearful of somebody like Petro taking over. I promised Maria Rosa to say something about Venezuela, so I'm just going to say something real quick about Venezuela. As Luis and probably Fernando and as everybody else, we have no data. I mean, I talk to people who say, oh, oil production went up to 800,000 barrels last month. That's good. Can you prove it? Of course not. This is what I heard. This is what they told me, et cetera, et cetera. But it seems to me that some stability has been restored in the case of Venezuela at this point in time. And then we probably will see some kind of growth again from a very low level, as we say, 80% contraction in nominal GDP, dollar denominated GDP. I mean, you're growing 10%, it's only $40 billion more. Just is crazy how much this has deteriorated. But the bottom line here is that, unfortunately, and this is being proven again, it tells us that socialism of the 21st century is the most difficult road towards dollarization, because Venezuela right now is, for all practical purposes, dollarized. And I'll finish with this, and I'll pass it back to you, Augusto.
Thank you very much, Alberto. And please remember, on the bottom of your screen, you should have a Q&A button in which you could include or insert any questions. We're not taking any questions orally, or we're not gonna give anybody the option to speak by raising their hand. So any questions you may have, please include them in the chat. Now to you, Fernando.
Thank you very much, Augusto, and thank you to the Andean American Associations for this invitation. It's a pleasure to be here. So let me do two things. First of all, tell you a bit how at Citi we're seeing the economy evolve moving in 2022, and then go a bit deeper on some subjects that are behind our views. And for that, I'm going to share with you a presentation I prepared for today. I cannot share my screen. Okay, then I'm not going to do that. So well, let me tell you a bit our forecast. So in terms of growth, as Luis very well explained, we have seen a kind of disappointing recovery in the region. Basically, roughly speaking, half of the countries have shown a growth rate this year that was larger than the contraction we observed in 2020, and the other half of the countries in the region have showed only a partial recovery. Regarding the countries in the Andean region, we have seen, or we are expecting to see, output expanding 9.5% in Colombia this year. So it's among the countries growing more than what they shrank in 2020 when output decreased 6.8%. For next year, we're expecting an expansion of 3.9%. In the case of Peru, also the recovery this year compensated for the contraction in 2020. We're expecting output to have increased 13.5% in 2021 after a very deep recession in 2020 of 11.1%. And for next year, we see growth at 3.5%. And then in the case of Ecuador, it has obviously weaker economic fundamentals than these other two countries. So the recovery is being softer. Ecuador's GDP fell 7.8% last year, and we're expecting an expansion of 3% for this year and 1.5% in 2022. And this comes after many years in which the region has been underperforming other emerging economies and also the rest of the world in terms of growth. So it's disappointing what we have seen this year in terms of the speed of the recovery, but it hasn't been completely surprising. And I will go deeper into why growth is disappointing in the region and why we think that low growth will continue to be the scenario going forward. Other thing that we have seen in the region this year is a significant acceleration in inflation. In some cases, or in Brazil, we're seeing inflation going over 10%, but in most of the big inflation targeters, we have seen inflation going above the targets. Therefore, we are seeing in a continuation of the hikes we have observed this year. In the case of Peru, we are expecting the policy rate to finish this year at 2.5%. We expect it to finish 2022 at 4.21%. In the case of Colombia, we expect an additional hike this year and to see the policy rate at 3% by the end of this year and increase further to 4.75% by the end of 2022. And I would say that this is a common trend. We expect more hikes in Brazil, we expect more hikes in Mexico, we expect more hikes in Chile. So we're in a context of a relatively slow recovery with an acceleration in inflation. So going a bit deeper on why we're seeing growth being a bit disappointing, I think that there are multiple reasons. We have been discussing and writing about LATAM's broken growth model, and it's a combination of factors that are keeping growth so contained in the region. But the main one is that when you look at the accumulation of capital and labor in LATAM, you can see that capital accumulation is way lower than what it used to be 10 years ago. At some point, the stock of capital in LATAM was growing at an annual rate of almost 4.5%. Now it's growing slightly less than 3%. So if these economies are investing less, it's not so surprising why they are growing less. And also the increase in the working age population has been decelerating significantly. Between 2025 and 2020, the working age population is going to increase slightly over 0.5%, while 10 years ago, it was increasing 3 times that rate. And we think that in some sense, LATAM is trapped in what we have called a consumption trap, because why investment is so low and therefore capital accumulation is low, which implies a low growth rate? Well, because as Alberto mentioned, savings are very low in the region. But when you look at the political trends, it's going to be very difficult to bring savings higher, because that would imply lowering consumption. Or in other words, in an environment of low growth, boosting savings implies lowering consumption, and that's very difficult from a political point of view. So it's an equilibrium very hard to exit. And similarly, if growth expectations are depressed, then it's harder. I mean, the expected return on investment is lower, and therefore investment remains low, and that implies lower growth ahead. So it's a very difficult self-fulfilling scenario. And when we analyzed external conditions, and more importantly, what do we expect for external conditions, we don't expect them to be better in the near future. I mean, next year, we're going to see a slowdown in China. We're going to see more restrictive external monetary conditions. This year, LATAM, in some sense, had a perfect temperature for growth to accelerate, and still the recoveries were disappointing. So we're not expecting, based on our forecast for commodities, global growth, and particularly Chinese growth and monetary policy in the developed economies, to see external conditions improving in 2022 and beyond. And the other thing that is likely to keep growth contained in LATAM is that macro policies are going to be contractionary. As I said before, the region is having an inflation problem, so we're seeing central banks hiking policy rates very aggressively. And also, when you look at fiscal policy, there are also challenges there. I mean, if you compare LATAM to other emerging regions, the stock of public debt is very high. If you also look at the stock of external debt, it's pretty high. So boosting domestic demand to exit this low growth scenario is unlikely to be realistic. And the other thing that I believe that is interesting to see, or what has been happening in LATAM, and it's pretty much consistent with this scenario of a low growth in the coming years, is what we have seen with the exchange rate this year. We have seen a very significant decoupling between commodity prices and the region's terms of trade and currencies. We are seeing super weak Latin American currencies, despite that terms of trade are very high. This probably is very much related with what we explained before regarding this low growth environment, but it implies an additional challenge for the central banks in the region, because these very weak currencies are causing inflation to accelerate, and that's why we are seeing central banks hiking, despite that the growth outlook is not particularly good. And I think that after so many years of a very low growth in the region, in a developed economy, we would say that this implies low growth implies lower equilibrium interest rates. In a small open economy like what we see in LATAM, low growth implies an expectation of a more depreciated currency tomorrow or in the future, and that implies that investors ask for higher interest rates to be willing to hold those currencies. So our view is that after these hikes, because of the acceleration in inflation, we are probably not going to see central banks easing policy rates in 2023 or in the future significantly, and probably rates will remain higher for longer, and this will keep hurting growth, and this is going to exacerbate this low growth self-fulfilling scenario. And I will finish there to allow the Q&A session to start, that I'm sure it's going to be very interesting. Thank you.
Thank you very much, Fernando. So maybe before I go to the question of the audience, the only question that we have so far, we commonly hear, and this is for you, Fernando. We commonly hear that a scenario that has a lot of challenges, and I think you use that word several times, and that's I mean, in my experience, you know, it's super common, but in Latin America, but challenges also bring opportunities. So is there, which ones do you think, which opportunities do you think these challenges could bring?
Yeah, that's a very good question. I think I have two answers for that. First of all, I think, you know, there are big opportunities for countries pursuing the right policies in this context. Because if you're looking at the region as a whole, given that the outlook isn't so bright, I think that investors are going to welcome very much if a certain country starts doing pro-growth reforms, structural reforms. We are not seeing a lot of that in the region. And I think that there are some countries that are trying to go in that direction within the region. I think that Ecuador is a very clear example of that. The last administration, I think that they have a very good diagnosis that doing all the fiscal consolidation that the economy needs to have a more stable macro is very difficult in a low growth environment. So the first thing they did was to send to the National Assembly a very a large bill, including not only tax reform, but also labor and productivity enhancing reforms. So I think that was very interesting. So I think that for countries going that direction, probably there are a lot of opportunities. And secondly, I also think that when we say that a scenario is self-fulfilling, or that a country or a region is trapped in a vicious circle, usually if, I don't know how to say in English, but if you do a vicious circle in the different direction, it becomes something very powerful. So I think that if we see political uncertainty coming down a bit, then growth is going to be higher. Then that's going to help on the fiscal front. So probably I think that in that case we could see a much better outlook if the region starts moving in the opposite direction. Because I think that right now expectations are pretty much depressed. So I think also if external conditions prove to be more supportive, that again could boost savings, could boost investment, could give governments more room to maneuver. And I will stop there.
Actually, Augusto, if I may chip in here, because I think it's a really relevant issue. And Fernando mentioned something that I think is one of the most interesting facts of the Latin America region with the pandemic period, et cetera, which is that complete structural break that we saw in EM current and LATAM currencies and commodity prices starting February, March 2020. It coincides with the initiation of the lockdown measures and stuff like that. And this is something which is very disturbing, to be completely honest, because I thought one of the few things that we can count on in LATAM was the relationship of our economies to commodity prices. And this is, Lucho, correct me if I'm wrong, but this is the first time that I have seen this outside of hyperinflation countries, which obviously you can't have that relationship. But the real should be at 450 today, based on commodity prices. The Colombian peso should be at 3,200 based on commodity prices. So the key question is whether or not this is going to become a new equilibrium going forward or not. And I believe that we're going to see the answer to that in 2022. And I'll finish with this. I think that there are two issues that will give us a hint on whether or not this is a situation under which LATAM just doesn't go back to the old normal and there's something new, which is the willingness of international investors to enter carry positions in local markets. That we will know that in 2022, and that will give us a signal for FDI, et cetera, because I think FDI is waiting for this money to come in to see if it makes sense or not, if in terms of a signaling of the future performance of the FX market, which is of extreme relevance for foreign direct investors that are looking 20 years ahead. So that's one of the things. And the second issue that I would say is whether or not, because we didn't talk about it, and this is very important, Maria Rosa, let's be honest, if we had spoken in February of in April of 2020. We were having this meeting in 2020, and Augusto, you asked me, is there any way that Colombia will vaccinate 70% of its people before the end of November 2021? I will tell you, in your dreams, absolutely no possibility. So,
and now they're having a third dose.
It is ridiculous. I mean, the Colombians are vaccinated about 6-year-olds right now. I can't believe it. This is like the same as in the United States. So it's pretty amazing, and we need to acknowledge that this is something that may be positive news in 2022. Of course, if, as Fernando says, everything else helps us, because without the international environment, it's going to be very difficult to deliver on the growth front.
Okay, well, it seems like this debate has sparkled some questions about through the audience. So maybe one that seems very much related. And Alberto, this is probably for you. One of the attendees asked, what do you expect to be the main drivers of LATAM currencies in 2022 in terms of trade, growth differentials, risk appetite?
I think that's probably an easy one. It's not going to be growth differentials. I don't think that's going to be the issue. It's going to be a combination in between risk appetite and terms of trade. I honestly don't think that we need to see higher oil prices for EM currencies to recover some ground. We just need to see oil in commodity prices remaining relatively stable where they are right now. One of the things, by the way, Augusto, this is incredible, but I was reading someplace, I think it was The Economist 2 weeks ago, for the energy transition just on the cars front. I believe I read that you need to mine for all the lithium that you have mined in history times 10 times, just for the cars part, not for the other alternative issues. So the countries in the region that have an expectation of having some lithium underground, this is beautiful. I mean, I don't think we're going to see any possibility of corrections in the price of lithium, especially on ESG, and it's the same for copper. It's the same for pretty much. I mean, our countries that are based on mining of minerals. This is a perfect environment for the next 10 years if we do the right thing. Obviously, if we do the right thing.
So there's a couple of questions that I think are somehow related about the influence of Russia and China in the region. One is more targeted to Venezuela, but what does the panel think about that? Maybe Luis, what do you have any view on their influence? Certainly from our perspective, we have seen Chinese companies aggressively expanding in the infrastructure sector, and also in the power sector. They're snapping projects here and there. My recollection is that a ton of the infrastructure not a ton, but the rail investments that are expected in Colombia are also driven by Chinese investors. So I see China a lot, maybe not Russia that much, at least not in the economical part. But what would you say is their influence?
Well, for sure, Russia is only, I think, Venezuela, and this is for for a geopolitical calculus, right? But China has, genuine economic interest in the region, partly because of, Latin America in general is resource rich, and China is in the business of trying to secure natural resources, raw materials for, to keep feeding their growth needs for the foreseeable future. So I would say that we can only expect more and more Chinese investment to come to the region in the years ahead. What is interesting is that China is adapting itself to the realities of each country, right? I remember, I mean, you can think of the modus in which they entered obviously in previous administration in Ecuador, or the way in which they have been entering in Venezuela, in which they pretty much get almost like handpicked by the government, the local governments, and they finance everything. They bring their own even manpower. This is a model that doesn't work in other countries in the region, and but we have seen the Chinese deciding to basically compete with other private sector, private corporates in bidding for concessions in mining or bidding for infrastructure projects, the way that you mentioned, and these are they're doing the engineering, but not necessarily bringing in Chinese workers all the way from China to Latin America, the way we actually do see in other parts of the world, either Africa or Middle East. So I think that they are adapting themselves to the local realities, but my sense is that we're going to continue to see a pipeline of FDI, Chinese FDI into Latin America. I think that if they can participate in transparent processes in which they're not getting so this I think is for so far, at least for the larger countries, it is not part of the Belt and Road initiative that where there was clearly lack of transparency, and many countries are adopting or assuming debt that no one knows until they have a problem repaying it. Hopefully that won't be the case and the fate of Latin American countries, but if there are Chinese companies that want to participate in concessions or opportunities for investment whenever there are any, so be it. They should be welcomed. Hopefully though they are ruled by market principles and transparency.
Thank you, Luis, for that. And thank you, Martin Schubert and Robert Cooper for the questions related to the influence of Russia and China. Then Michael Skoll and Victor Martinez, I think, asked a somehow related question about the potential impact of some supply chains reallocation to the region. I don't know who would like to take that, and how do you see that as a something happening or not?
Well, I mean, this is actually the perennial discussion, Augusto, of our region. One of the things that I always was amazed with, it's the incapacity of Mexico to gather more interest from multinational companies to open shop in the northern border, while the trade war in between Trump and Xi was starting. And the reason for that is it's pure ideological. It's just I mean, when you speak to real sector companies, etc., why wouldn't they move in mass to Mexico? It was all a function of ideological issues. The lack of the need to advance and further deregulation, lower taxes, things that you can't talk under a Morena government, but you should be talking about that, and that's the unfortunate part. So, on a normal situation, when if you had a more market-friendly government, I would say that Mexico's steady state FDI, which is put it $22-24 billion, whatever, with a trade war, it should have gone to $60 billion easily, and it didn't. It didn't because we didn't take the appropriate actions to lure those investments. Now, there are other countries in the region that are trying to do this. I mean, I know for a fact that Colombia, which is a much more market-friendly country, has been, the president has been going abroad, has been talking to people, come here, open, and there's a lot of activity in Barranquilla and stuff like that, but it's not to the level that could have existed in a place like Mexico. So if the region understands how the world works and what you need to do to help the U.S. in the process of reshoring, then we're going to see much more investment into the different countries. Unfortunately, based on what I hear from the discussions on the elections in Chile, the elections in Brazil, the elections in Peru, the elections in Colombia, well, this is not even close to the top of the discussion themes, and unfortunately. But anyway, it is what it is.
Yeah, no, certainly a lost opportunity has tends to happen in our dear region. So I think maybe the last question that that's in the Q&A which is Bolivia located in Latin America? I guess it's just a wink to us to say a line about Bolivia. So I don't know, guys. Maybe Fernando, do you have anything to say about Bolivia? And well, I mean, they have political turmoil and whatnot, but
yeah, unfortunately, at City we don't cover Bolivia, so I won't be able to say much about it. But probably my colleagues can.
Same thing. We don't have active coverage. As you know, the coverage goes with, how liquid bonds are and
Right.
demand for investors. So that drives the decision. So nothing against Bolivia being reflected here.
Same here. I'm counting my days to go to Bolivia because I haven't been there. So that's one of my to-do things in the next 2 years.
yeah. So sorry to the audience, but yeah, I also don't have anything to add. Frankly, the last thing I saw in Bolivia was a litigation, so nothing to report here. So Maria Rosa, I think we're very close to the hour, so may I turn it to you?
Yes. Thank you so much, Luis, Alberto, Fernando, y Augusto, for dealing with such a huge topic in such a short time. It is amazing how brilliantly you have done. And I do want to give a special thanks to Luis because he's connecting from London. And I know it's very late there. So we really appreciate your time and of course, everyone else, all the speakers. I also would like to thank our very hardworking staff for making this program possible. Our Executive Secretary, Linda Calvet, the Director of the Colombian American Association, Lina Delgado, our Program Director, Alexandra Vaquerizo, and our Program Officer, Lori Dominguez. Just before I let you go, I would like you to know that December 7th, the invitations have already been sent out. We are hosting the Peruvian American Association is hosting the Foreign Commerce and Tourism Minister of Peru. And the topic is Peru Trade and Tourism Perspectives, What Can Business Expect? And if you're interested in becoming a member of the Andean American Association, at the end of each invitation, there is an info that you can write to us. We will welcome all memberships, of course. And thank you all for participating. Thank to our wonderful speakers, and hope to see you soon. And Merry Christmas, Happy Holidays to everyone.
Happy
Thank you
holidays.
very much.
Maria Rosa.
Take care.
Happy
Bye.
holidays.